All right, my name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about something that is probably one of the biggest issues with small business owners, and that's cash flow. It's one point that seems to be on the mind of most small business owners. You're trying to grow, you're trying to fuel that growth, and essentially the cash provides the fuel for that growth. The delicate balance between being able to provide for growth, but then keep the lights on and keep everything going so that you can continue to function, operate, and grow. I wanted to go through a few things that you as business owners can do to help alleviate some of the issues that I see a lot with having cash flow. The first thing is being able to utilize credit. You can get jammed up if there's a large expense that you have to incur, especially if it's something that's unexpected. For example, I had a client who's operated their store, and in the middle of the summer, the AC unit goes out, and then come to find out they have to pay 30 grand to get it fixed. So obviously that was something that was unexpected. It's a huge expense, and it happened in the middle of a heat wave, so they had no choice but to pony up the money to pay it. With things like that, as opposed to just coming out and paying the cash, it's really being able to utilize credit properly. A couple ways that you can do that. You obviously have your business credit cards, but what might even be a better option is to utilize lines of credit. It's very underutilized, and I think more business owners should look to get and use the line of credit, mainly because that interest rate is usually a lot lower than what a credit card would be. And it essentially functions like a credit card. For those of you that might not be familiar, it's a credit line with a bank. You get a fixed dollar amount and you can use it as see fit, and you only pay interest on the outstanding balance. So you would pay it back when you're ready. There are minimum payments that you have to make, but nonetheless, those interest rates are way lower than what credit card rates are. So it's a good way to utilize credit, manage cash flow, and not pay as much interest when you have to pay these things back. So that's one thing. But another thing, which is widely overlooked, is the use of getting credit from vendors. So when going back to this example of my client needing to shell out 30 grand, most vendors understand the position that you're in. Some vendors that have high ticket items like that will offer their own credit stance, and they may even carry the credit for you. And even if it's something that they don't formally do, sometimes it could be in your best interest to simply approach them and say, hey, look, can we work something out, and make an arrangement with them to pay over time. You would be surprised at the flexibility that you would get, and you could get vendors that would agree to that. To understand, they're in a similar situation as you, 9 times out of 10, where they're a small business and they're trying to keep the lights on and going as well. So you may want to utilize not only getting traditional credit avenues, but going to the vendors, a little untraditional way to get credit. So utilizing credit is one way. The other is alternating the payout dates. This works well if you have a staff of people that you pay consistently. What I've done with a couple of my clients is if they have a staff that they're paying on salary, or their contractors, if that staff is getting paid every other week, every 2 weeks, where most folks get paid on salary, one thing we did to help alleviate cash flow issues is we alternated paydays. So half of the staff will get paid on one week, half of the staff will get paid on the other week. So it would be alternating paydays. Everyone's still getting paid every 2 weeks, but the payment dates are staggered. Half of the staff is on one 2-week cycle, half of the staff is on another 2-week cycle. So from the employer standpoint, they're making payroll every week, but that nut is a bit smaller as opposed to waiting 2 weeks and then having to pay everybody in 2 weeks. And that payout is a lot larger. So it allows you to flatten those payroll and the payouts. Makes it a little easier on cash flow, where your outflow is pretty consistent and gives you a little bit more time to make collections, to draw in revenue to cover those payouts. So another issue I see is a lot of folks, when they do get bills where they're not able to pay right away, they sit on the bill, they don't say anything to the person or institution or whoever it is that they need to pay, and they let the bill linger until they say, I'm ready to go ahead and pay. The problem with that is, in most instances, if you're not paying on time, there can be a penalty or some sort of interest that accrues for not paying on time. This is notorious for taxes. With me being a tax accountant, I see this a lot with tax due balances where you put it off, but while you're putting it off, interest and penalties are accruing. So by the time that you are ready to pay, you may wind up owing more in penalties and interest than what the actual tax bill was. So it just winds up being a lot of wasted money. And this simply just could have been avoided if you were to just simply take the tax bill on or address it right away. You may not necessarily need to pay it right away because you might not have the means to do it, but you can always work out a payment plan. Or even if you don't have a formal payment plan, just start sending money in to start knocking down the balance, pay what you can. So that's a glaring example with the tax bills, but some vendors have penalties too. If it's some sort of other vendor bill, reach out to the vendor and see if you're able to work something out. Because then the extreme is that if you owe a vendor, you don't pay them, they can bring you to court, they sue you, and the next thing you know, you got to pay an attorney a bunch of fees to get out of it. Versus had you just worked it out initially, you could have avoided it. It's a lot more expensive to not take bills head on once you get them. And lastly, we've been talking about how to manage expenses, but the other side of that equation is how to handle receivables. A lot of businesses have cash flow issues that if they have receivables, it's collecting those receivables and having that money outstanding that people owe you. If you're in a cash business or a retail spot, that's not really an issue. But if you're more in the services business, then that might be an issue where you've done work, you've billed the client, and you're still waiting to get paid. Meanwhile, the bills don't stop. So you want to cut down on that time between when you're billing and when you're getting paid. One way to do it is to cut down on receivables. You may want to see if you can eliminate it altogether. One way to do it is to have a payment method prior to finishing the work. So if you have an arrangement with a client to perform services and you need to get paid after the services are done, or they gave you a deposit and then you have to collect the remainder after the service is done, you can collect the method of payment prior to a card on file with that client. And the arrangement or the deal could just simply be, when we're done, you're just going to charge the card for the remainder. So that way you don't have to wait for that client to pay you. You can go ahead and draw the payment from the client once you perform the work and the client is satisfied with the work. So that's one thing. Also, eliminate written checks. By all means, if you can, especially if they have to wait to have it mailed to them. Not many businesses are doing that now, but if you can, avoid the paper checks, because one of the things that I hated, because I used to be guilty of this, mailbox watching. You're waiting for a check to come in the mail and you're hoping and praying that today was the day you got paid. You want to eliminate that, especially now with all the methods that folks have to pay electronically. So just way more efficient ways to do it. So if you're still collecting checks, see if there's a way you can eliminate that. So that's all for now. I hope this was helpful. If you have any more questions about this topic or any other accounting or tax related questions, feel free to reach out. I'm happy to help. All right, that's all for now, and I'll talk to you on the next one.